All right. Good morning, everyone. This is the morning of 2nd of November, Sunday. We're going to quickly take a look at the markets, how it played out last week. No fancy intro section in this weekend analysis. So I hope everything's going on well at your end. It was the end of the month. It was the end of the week. So we'll have a lot to discuss in this particular analysis. Starting off with the Nifty, of course. Left hand side, monthly, mid, weekly. On the right hand side, I have the daily time frame. The monthly is looking good. The monthly has come extremely close to its all-time highs. Many sectoral charts have hit their all-time highs already. It's a bullish market. Monthly charts, view positive. With that in mind, we come to the weekly, and weekly we've had this breakout. We've had this breakout, and last week we can see it's a red icon, which gives us a fall in the average price. But our state of flow is positive. The next RSI indicator is also showing positivity. It's just a cool off after the recent 3-4 week rally that we've had. So overall view from the weekly is also on the positive side. And now when we come to the daily, this is where we see things slowing down. I have spoken about this Fibonacci target, which is close to that 161.8 extension level. There you go. And the good thing is 26,100 has been tested a couple of times, and it has proven as the short-term resistance. It has proven that this is the upside resistance to look out for, number one. Number two, I mentioned this in my end of the day analysis, which I share on my app community, that there has been a hook setup, which is a negative setup, which gives us signs of slowdown. This was like 3 days back. It has played off so far so good, especially with last Friday's 155 points down more. Now, what has happened is we have a break below Thursday's HAGB, this red icon, and then Friday slipped below this, and Friday it closed below this. I consider these to be signs of confirmations of the slowdown that it was showing on Thursday. That sign of slowdown has got confirmed on Friday. And what this tells me that I should be preparing for further downsides. Or in other words, I can say that if further downsides come in the upcoming week, I should not be surprised. Now, this is my view, this is my anticipation, not my prediction. I don't want to get into the domain of prediction. Anything can happen to price next week. Price can go away straight away and hit an all-time high from here. Price can give me what I am anticipating, a short-term correction, or price can surprise me with a much deeper correction. So I'm not here to predict what's exactly going to happen with price and see I was right, and all those narratives is not part of my game. I'm just looking at price, looking at how it is behaving, trying to create some kind of a expected anticipatory lines in which it can behave. And accordingly, I'm going to position myself. I'm more interested in how should I position myself the next week. So if the daily charts of the Nifty is showing me confirmed signs of weakness, and if this confirmed signs of weakness leads to further correction, then how I should position myself is I will not be aggressively bullish next week. My view is bullish because the charts are predominantly bullish, going through a slowdown. My strategy will be to look out for long trades, but it's not the market where it's just breaking out and looking extremely beautiful. So whichever long trades I get with a little bit of conviction, I can go for it. Not now. The analogy that I use is if you have a beautiful highway and it's smooth road, you can drive at 120, 140, no issues. But then if you're in a narrow lane and it's not that wide and it's got potholes, speed breakers, etc., then you will not be able to drive so smooth. You have to come down to a 30, 40 or 25 kilometers. So this is what the market is telling me. Slow down. Keep a positive view. Look out for long trades, but do not be aggressively long. So that's our view on the Nifty. With that in mind, if we come down to the broader markets and take a look at CNX 500, it more or less mirrors what the Nifty was telling us. So the view from the CNX 500 is same. Come to CNX Midcap, very close to its all-time high. Good looking monthly charts, very good looking weekly charts. And over here also you can see that early signs of momentum slowdown is there. There are no divergences shaping up on the daily charts, which is a good thing. But as you can see that Midcap in its rally had taken occasional drops, pullbacks, and has continuously gone up. These kind of charts, which are so close to their all-time highs, should give us an all-time high anytime soon. CNX Small Cap is distinctly away from its all-time highs. It has underperformed the mid-cap by quite a bit of a margin. The daily chart is also similar to that of mid-cap. So bullishness on the mid-cap and small cap, much more than what we have seen in Nifty. But overall view, keeping in mind Nifty and the CNX 500, is be a little careful, cautious, and be very selective in your long trades. The sell-off, 155 sell-off that we saw, correction that we saw last Friday, has the potential to extend a little bit more early next week. Now we'll come to the sectoral charts. When we come to the sectoral charts, we always bring in our RRG graphs. I'm using the strike analytics here. By the way, if you want to use RRG graph, I would definitely suggest use the strike analytics. I leave a link below wherein you can get some extra discount. I had a word with their management team and they were very nice to agree. I requested, can we get some extra discount for anyone who's a part of my community or my, let's say, been following my work, right? And they agreed. I'm very happy for that. So link below in the description box. If you want to use RRG with strike analytics, go ahead. So RRG on strike analytics, first thing is we're going to come down to NSE sectors. The 15 sectors that makes up the Nifty 50 is what I'm loading right now. It should come up here. In the meantime, I will change the benchmark. There you go. Nifty 500. 15 sectors, benchmark 500. Daily time frame, I will change it to not monthly, but weekly. So weekly. And the count, I'm going to increase to 12. Now, if you remember, we've been counting from this point. What we were interested in is this is where the market bottomed out. This is where the choppy behavior of the market and the trending behavior of market has happened. So we are interested in this particular time frame. Who's outperforming, who's underperforming, who's slowing down, who's picking up during this period, which means that 1, 2, 3, 6, 9, and 12. There you go, 12 weeks. Going back to that RRG screen, increasing the count to 12. So 12 count, weekly counts, 500 as the benchmark, and these 15 sectors. It's a good looking RRG. It's a nice looking RRG where there are some names on the leading, slowing down, not much in the weakening, a lot of them improving. This is a good sign. So let's take a look at them. I'm going to sort this table in percentage change, descending order. PSU Bank is the biggest gainer over the last 12 weeks, 16.5% gain. And a very good looking RRG. It has gains vertically, that is momentum, and it has got gains horizontal axis, which is relative strength per se, RS ratio. So RRG is beautiful. RRG is telling us this is in the leading quadrant, this is a leader, continue to look for long trades. With that in mind, if we come and take a look at the CNX PSU Banking Index, what do we see? We see an all-time high, congratulations, beautiful looking monthly, wonderful looking weekly, and of course a stretched daily. It gives a little bit of discomfort to chase these kind of charts. If I take a decision on the CNX PSU Bank, view is of course bullish, positive. Strategy should be looking out for long trades, but I'm not going to chase breakouts. Definitely not. Any kind of a short-term cool-off, like a 1 or 2 bar cool-off, or even a slightly largish cool-off, will definitely give me the comfort and it has created some headroom for further upside. So positive, of course, but positive does not necessarily mean that you buy. You wait. So keep it in your watch list. We flagged these sectors. CNX PSU Bank should be flagged green. We had flagged it green long time back and we continue to do so. Nifty Metal. Nifty Metal is also looking beautiful in terms of RRG readings. Gains across both momentum as well as relative strength. Metal bullish in terms of relative strength. In terms of price, when we come and take a look at CNX Metal, the monthly chart, again, beautiful all-time high. Congratulations there. Weekly charts behaving beautiful, no problem, no divergences, no signs of slowdown from the monthly or the weekly. Daily, Friday's move, closing at the lowest point of the bar, giving us an HAGB after a beautiful one-way rally, is just giving us a drop. State of flow being positive. It is a bullish chart. Again, the same logic. View is positive. Strategy should be looking out for long trades. Do not chase breakouts. Wait for pullbacks like this. So ideally, once I have created a view on a sector, what I would do, my next step will be to go down to the top 10, 5 or 10 stocks of that particular sector and try and evaluate if there's any opportunity there or not. But try not to trade breakouts. So metal and PSU Bank, both strong, positive, green flags. Now Nifty Auto. Auto has the maximum relative strength. It is the farthest from the axis. So the horizontal axis gain is the max. It's the vertical axis which is dropping, means the momentum of the relative strength is slowing down. Ideally, these are strong uptrending charts which are essentially slowing down, and one needs to be careful. CNX Auto hit an all-time high last month. Since then, it has been consolidating. This consolidation has started to give us signs of divergence. State of flow is still positive, and because the trend and momentum has been diverging, you can see that the daily chart is range bound. If you remember, if you follow my work, I've been saying that it is a bullish chart, view is bullish, positive, look for long trades, but then, keep your long trades short term in nature, 2 to 3, 4 days, quick trades, get out, don't hold on to them. I maintain the same view, but monthly positive, no doubt about that. Weekly positive with signs of slowdown. With a divergence, I have to respect that divergence. Come to the daily, the trend, the state of flow, the momentum, everything has turned down. It is still within that range. So the daily is not giving me that comfort. Weekly is not giving me the comfort because of the sign of slowdown. Monthly is fine, no problem. Number one, if CNX Auto slips below last week's low, then I can expect further downside. Those further downsides, I'm not going to go short because it's a very strong sector. It has the maximum relative strength. It is a sector which has hit all-time high 2 months back. So I'm not going to short a leader. So definitely not for shorting purpose, but if it comes down, then I'll be looking out for reversal signs on the upside. So CNX Auto, I've taken the green flag off and I've gone neutral. I want to see whether the daily weakness continues further or not. And if it does, will the weekly hold on to it and give us a reversal? So my view is cautiously bullish. I will be looking out for long trades, but I'm in no hurry whatsoever. My main intention is to check whether the prices will come down to the previous lows or not. So these are the 3 sectors which are there in the leading quadrant. Coming down to the weakening quadrant, that is in a clockwise manner down here, we have Midcap 100 and Consumer Durables. So Midcap and Smallcap we have discussed. Chart-wise, they look all good and little stretched. One needs to be a little selective there. But Consumer Durables is what is a very interesting RRG. If you remember, Consumer Durables have been slowly over the last 2 months, I would say, is losing vertical distance. Relative strength positioning is more or less same. It has never changed. It's more or less in this area. So it does not have a lot of relative strength. It is on the right hand side, but it does not have a lot of. What it has lost, its momentum of the relative. If you use RRG or if you intend to use RRG, remember that if the current situation is close to the axis, means right now it's in weakening. 1 week back it was in leading. Because it's so close to the axis, with just a 1 or 2 weeks movement, it can go anywhere. It can straight away go to lagging. It can straight away go back to leading. So it's very close to change of the quadrants. So I personally do not pay a lot of weightage to the RRG reading here. in terms of relative strength, but definitely in terms of momentum weakness. Keeping this in mind, of course, my final call is 100% always from price. Now I come to consumer durables monthly chart. 3 months, it is choppy, consolidating, small Heiken-Ashis with double shadows. Weekly gives me choppy behavior. I can very well see that. No runaway beautiful move on the upside, no crash on the downside, swings. And that swings have been pretty much brutal on the daily time frame. On the daily time frame, it has given you opportunities on both the sides. So, view, strategy, monthly, neutral, contradictory. It's the weekly which is interesting because I had a bullish Heiken 2 weeks back. I have a consolidatory Heiken last week, which means that if I get a move above last week's high, if this index moves above last week's high, I can expect further buying momentum. I can. The weekly chart is improving. The daily chart has more or less improved and it's a bit choppy. State of flow is still positive. So I'm maintaining a green flag. And my main lookout will be Friday's high. Keep an eye on Friday's high. Take a look at the top 5 stocks and see if you get this follow through move or not. That consumer durables is a breakout candidate. Going back to RRG, now we will come to the lagging quadrant. In the lagging quadrant, we have around 5 names. Realty, we know was weak, but it has given us a beautiful move in terms of momentum. CNX Realty on the price, of course, you are aware of the fact that it has given us a fantastic bounce back rally. But let's start with the monthly first. Monthly. Small bodied Heiken with both the shadows, trend-wise, state of flow, momentum-wise negative. It's giving us a bounce back. So monthly, I would say neutral. Weekly positive, no second thoughts. Daily positive, no second thoughts. But the daily has started to give you wide ranges and there will be signs of momentum slowdown and divert. So view is positive. Strategy is to go for long trades. Do not do breakout trades. Wait, it will 100%. I can't say 100%, but very high chance these kind of charts will give you some signs of slowdown correction. So green flag, keep an eye, keep it on your watch list. Small cap. Small cap we have discussed with the mid cap. Small cap is underperforming the mid cap. Small cap is underperforming the Nifty also. It is in the lagging quadrant. So be a little careful if you're looking at trading any of the top small cap names. Now comes the important part of the market, the bank Nifty. When we talk about the bank Nifty, we always club it with private banks and financial services. PSU Bank we have already discussed. It is outperforming the privates by a pretty big margin. Now, Bank Nifty. Bank Nifty has been in the lagging quadrant, but it has been nudging up. It's been gaining some momentum of the relative strength, which is a good sign. Financial services, same behavior. And private banks was behaving the same. And with the recent gains, it has just moved to the improving quadrant. So, Bank Nifty, that's why private bank and financial services, I would say are in their momentum of the relative strength is improving. But they do not have relative strength. This is a good thing as well as a bad thing. The good thing is they have let's say if I take a look at this in CNX Finance, this is Nifty Private Bank. If I take a look at the Nifty Private Bank, if it behaves well, if stocks and if the index continues to show resilience, then it can behave like this, which can lead the market to an all-time high and further away, higher from all-time high. So it's an improving one. In terms of RRG, but in terms of price, all-time high from Bank Nifty last month. Congratulations. Weekly, beautiful. No problem. My sign of slowdown. Yes, we can see that. There is a divergence which is just like that behaving on the Nifty and the Bank Nifty together. So sign of slowdown. We need to be a little sensible. You had a great run up. Expect some kind of a slowdown. If it's a consolidation, it's good. Even if it's a correction, it's still not that bad. So Bank Nifty, Private Bank, and CNX Finance, they all more or less mirror the similar view. View bullish, long, of course, is the strategy. But wait, if I take a look at CNX Finance in particular, Finance on the daily time frame, it's losing its grip on that after this move. So I can drop some Fibonacci retracements, I can do some fractal readings, some polarity readings, take a look at the top 5 names, and you will be able to figure out that from where maybe the fall will stop and give us a bounce. So that's the essential call from within this important pocket, the Bank Nifty Finance, right? So we are maintaining the bullish flag. We will be looking out for long trades. The others in the lagging quadrant, the only one left is Pharma. Pharma was doing fine. Pharma RRG wise was gaining, improving and going towards leading. And all of a sudden it lost its momentum. It just dropped in terms of the relative strength momentum. And now it has gone to lagging and it's angling down. This is not good RRG. This is a weak RRG reading. Is the price saying the same thing? Let's take a look at CNX Pharma. Monthly, choppy for 3 months, neutral, with a slight bullish bias. Weekly, clearly that choppiness is getting reflected. But the weekly, just like consumer durables, has given us a pullback after a positive bullish hike in, which means, again, in terms of pharma, if you get a move above last week's high, exactly what we discussed with consumer durable, if we get this move, look out for pharma names can perform. If not, then you can expect that it was choppy, it will continue to be choppy. So if the index wants to come out of this choppiness, it has to scale above last Friday's high and hopefully close above last Friday's high. If not, if you see the opposite early next week, then give away that hope of a breakout. But is it a breakout candidate? Yes. Above which level? Last week's high. So pharma, should I keep it a green flag? Yes. So when I'm keeping these flags, green, red, or removing, I'm essentially giving more weightage to the weekly. I'm giving more weightage to the weekly. And based on that, I'm giving these flags. So that's why pharma stays as a green flag. Now the last quadrant, which is improving. Now this is where we have private bank. I've discussed that with you. This is where we have Nifty Energy. This is a very interesting improving one. It has just entered the improving quadrant. Energy, I think you will be able to recall. I was, suggesting that, listen, things have improved. State of flow on the weekly is looking good. It is consolidating. It is again consolidating. Look out for the breakout, last week's high, and it delivered the breakout. This is good. This is a good example wherein you read the chart, you create an anticipation, and price behaves as per your anticipation. Energy, monthly, improving. Weekly, improved positive. Daily, yes, improved positive. Little stretch, that's okay. Green flag, look out for long trades. There's not much to discuss over here. A very clean sectoral reading here. PSE, public sector enterprise, also just enters the improving quadrant. CNX public sector enterprise, monthly, improved to a lot of extent. It is a breakout candidate even on the monthly. Weekly, improved, slightly choppy. Yes, we remember it has been a little choppy of late. Now, recently has given us a fresh breakout, this one. It's got some levels to deal with as it goes up. Mostly readings are positive, so green flag, public sector enterprise. FMCG. FMCG has dropped its momentum of relative strength just exactly the way the consumer durables had dropped. The only difference is consumer durables has some relative strength. FMCG even does not have that. Not a very great RRG, but nevertheless, let's take a look at FMCG. FMCG monthly has been choppy for 5 months. So we don't have much clarity. View, if you ask me, monthly is a tad negative. But it's the weekly and the daily that is of interest. If you come down to the weekly, you see bullish hike in, followed by an HAGB, state of flow is positive, looking good. Same logic which we applied in consumer durables and the same logic we applied in CNX Pharma. If and only if we get a break above last week's high, then these guys can give us some move. Can. So there's a tad bullishness, or should I say confirmed breakout reading from the weekly. So I'm keeping a green flag. With that, when I come into the daily, I can see consolidation. This is a clear-cut breakout candidate chart. So in these three sectors, consumer durables, pharma, and FMCG, there is a window of opportunity for fresh positive momentum if it scales above last week's high. If it fails, then it will continue to underperform and stay choppy. Now, I would like to add one thing over here. Did you notice the nature of the three sectors? Consumer durables, FMCG, essentially consumption as a theme. It can be services or products. And then pharma. These are traditionally defensives. These are traditionally sectors wherein you see some kind of a buying when the markets come down a little bit. Traditionally, it's not. I cannot correlate it with a correlation coefficient of 1, but this is where the markets tends to hide behind, especially when things are just turning on the downside. We saw signs of slowdown in the Nifty Bank Nifty. If that sign of slowdown leads to actual slowdown, will that lead to buying over these defensives? Question mark. This is interesting. We see signs of breakout over here. We see signs of slowdown. So it's kind of fitting in really well. Now, will the price play out exactly that well? That only the next 2 weeks we will be able to decide based on the next 2 weeks price behavior. Now, in this particular list, the last one is IT. IT is probably the farthest from the axis when it comes to relative strength. But it's been gaining within the last 12 weeks. You can see the movement is left to right. Weakest, yes. But within the last 12 weeks, gaining, yes. Momentum dropping a little bit. Not a very great looking RRG. But what about price? Monthly, weak. Not much second thoughts. Weekly, improving. Pretty much improved. Not bad. If I zoom in, I can see positive bullish high candle. And daily, signs of consolidation. Daily chart is predominantly bullish, signs of consolidation slowdown. This makes it interesting. And it's an important sector. Right after the financials, IT enjoys the maximum weightage. So you cannot ignore it either. Our flags, our strategy is predominantly based on what is the weekly telling us. Weekly telling us it is improving. It has improved to a lot of extent. With that, when I add the daily, it is consolidating and contracting. So maybe we can get this breakout. Maybe. So keeping the weekly in mind, I'm giving it a green flag. Keeping in mind that the Bank Nifty is showing signs of weakness. And if the Bank Nifty comes down, I will be interested to observe, will we get that push, support, balance from the IT or not? So as of now, keeping a green flag, only time will tell us whether we get the further move or it kind of retraces further. Right? Apart from those 15 sectors, you know that I have 4 more in this trading view list, which is the capital market, monthly okay, weekly, again, the same logic as we discussed in those 3 sectors, typical weekly breakout candidate, all-time high, 52-week high kind of breakout candidate, capital market. It had a sharp sell-off recently, if you remember, especially in the AMCs. So the weekly chart has lost its upper shadow. So I would suggest don't be in a haste. Wait for the daily chart to turn around and look for long opportunities. Green flag stays. Defense. Not performing as much as I would have thought so that it will. But this is the last, it's at the borderline. So the line of control. If it needs to scale up, I think this is it. Because the weekly charts is just on the verge of reversing on the downside. We need a move above last week's high. We need a move above Friday's high. Bullish, yes, definitely. Not table thumping bullish, but this is it. This is an opportunity. So we had, I think, 3, 4, 5 sectors wherein you can mark the weekly highs as a breakout. Fine. Digital. And okay, coming out of that range, given you a breakout on the weekly, cooling off on the daily, fine, no problem. Wait out. Whoa. Keep it in the watch list. Wait out for long opportunities. Tourism, we kept it neutral. I think tourism was weak. Monthly is, yes, momentum-wise, it is weakening. Weekly-wise, it is choppy. It has given an outside bar. And you can see how well it went up and then it fell also. So it's better to stay away from candidates which are choppy like this. In a bullish market environment, if you're choppy and you're angling down, it's better to stay away. So tourism, we'll flag it off. We'll just keep it neutral alongside auto. There's a big difference between these neutral. According to the way we flag them, we create our views. Both of them are neutral. But the auto is significantly different in terms of behavior compared to tourism. Fine. So that's the take on the sectors. I hope that this will help you to create your strategy for the week ahead. It's a truncated week. We have a holiday. So 4 days of trading next week. Keep that in mind and strategize accordingly. Thank you for your support. Trade well and take care of yourselves. Goodbye.